Bitcoiners, Lockie here from Edge 21. Today we're decoding Bitcoin's latest price moves, why it's holding strong above 94k, what's fueling demand, and the key levels that could shape Bitcoin's next big move. Whether you're stacking sats or just watching the market, this is the insight you need to stay ahead. Let's dive in. What's holding Bitcoin above 94k? Bitcoin is proving its resilience once again. Despite macro headwinds like the US dollar surging to a 110 DXY index and rising Treasury yields, Bitcoin is held firm above 94k. That's a strong signal that demand remains high even as global markets tighten. Why? Short-term holders or STHs are accumulating, not selling. Their cost basis sits at 88k, making it a key psychological support zone. Historically, this has been a buy the dip level when new investors step in. You can see this in the short-term holder realized profit loss ratio graph from Check on Chain, which tracks how much of the market is sitting in profit or loss. So who's buying? Institutional and retail confidence is surging. Let's talk demand. While some Bitcoin was offloaded by long-term holders or LTHs, institutional investors and ETFs are stepping in heavily. Bitcoin ETFs have pulled in $36.4 billion over the past year. And while we saw minor outflows last week, demand remains historically high. Retail investors, aka shrimps, are stacking Bitcoin too, matching patterns from previous bull cycles. You can see this in the Bitcoin ETF flows graph, also from Check on Chain. ETF inflows are still high, even as the market consolidates. So what's next for Bitcoin? Looking ahead, there are two key zones to watch. Downside risk: if Bitcoin loses 94k, the next critical support is at 86 to 88k. This is where many short-term holders enter the market. Below that, there's a weak support structure until 73k. Upside potential: if Bitcoin breaks past 100k, we could see 104k in the short term and possibly new all-time highs. The short-term holder MVRV indicator graph from Check on Chain shows Bitcoin isn't in overbought territory yet, which means further upside is very possible. Final thoughts: bullish or cautious? Right now, Bitcoin is balancing between consolidation and breakout. Here's what to keep in mind. Long-term holders are selling, but ETFs are still accumulating. 86k remains a must-hold level for bulls. Macro factors like bond yields and USD strength would shake things up short-term. But in the big picture, Bitcoin's long-term story remains as strong as ever. Scarcity, demand, adoption. The fundamentals are still bulletproof. And that's a wrap for this week's Bitcoin price analysis. Bitcoin's price action is heating up, and the key levels, 94k support and 104k resistance, will be crucial in the coming weeks. If you found this analysis useful, smash that like button, share this video, and subscribe to Edge 21 for your weekly dose of Bitcoin insights. Bitcoin is changing the game, and we're here to give you the edge you need to stay ahead of the curve. Don't forget to check out edge21.co, where you'll find personalized content, including trending tweets, Nostr notes, videos, articles, and price analysis about Bitcoin. Thanks for watching, stay strong, and hodl on.